Hello, everyone. This is Dan Gramza, and welcome to Gramza Market Studies for Thursday, February 21st. In the NASDAQ market, we found sellers coming in with both hands, primarily based on some Federal Reserve information that came out. We talked about it in the advanced video, but let's see what happened here. Here's yesterday's action. So as fast as we went up the previous day, we came right back down. The issue that we talked about for this previous day here was the size of the move with respect to these previous highs. Also, that the way this came back down is what I call an equal and opposite, and this sets up more for a neutral strategy than it does a bearish strategy. I'm not looking for follow through here to the downside to any great extent. In the euro, it got weaker, which means the US dollar got stronger. That's what we're seeing here right now. And for that action, also, I do not expect strong follow through to the downside. I think we could stop and take a breath here. If we look at the interest rate markets, the 10-year notes firmed up, which makes sense based upon what we saw in the stock market. Again, I do not think a sustainable rally is going to set up here. This is a bullish structure, but I think it's going to lack that necessary follow through. Gold, all commodities really backed off on some of this news that we were talking about, and we can see gold did that as well. A little bit of a bounce here towards the end of that session, and we're seeing Asia firming up a little bit, and I think we're going to see more of that as this unfolds. It's the type of news that we're talking about here, and that's why I'm looking for that kind of reaction. If we look at crude oil, the US dollar got stronger, crude oil got weaker. Logical action that we see here. The difference here, I should just explain this. These are bullish, bearish levels. This difference is $6. I'm not implying at all that anyone would earn that kind of return, but what I'm giving you a feel for is the magnitude of change here. And depending on which contract, there's a mini contract you could trade, which is $500 basically for a dollar move. That market would be a 6 times 500 or a $3,000 move. The full size contract is $1,000 per one full dollar move, and that would be a $6,000 move, just to give you a feel for the size of magnitude of change here. Well, what are we looking for? Not a dramatic move to the downside, though. We're looking for a sideways move here as well. In the grains, soybeans did continue their move to the upside. They are at critical levels right now. We may put up in a little base here. In other words, a sideways market for 2 days. Friday's action is really going to be the focus. Well, that concludes today's market studies. Thank you for being with me. Look forward to being with you again, and in the meantime, take care.